welcome to The Trade. Wonderful to have you with us. Let's get across some of those headlines traders are watching, and Google's parent Alphabet topping those third quarter revenue and earnings expectations, and the shares moved higher in aftermarket trade. Meantime, markets in Asia appearing to lack a bit of direction at the open. Investors still digesting the news of a potential 10 trillion yuan fiscal boost from China, while weighing the impact of a firm US dollar and those treasury yields that remain buoyant. Meantime, Reuters is reporting that OpenAI is working with Broadcom and TSMC to build its first in-house chip designed to support AI systems, while adding AMD chips alongside NVIDIA chips to meet its surging infrastructure demands. And BP has reported a 30% drop in third quarter profit to $2.3 billion, the lowest in almost 4 years, weighed down by weaker refining margins and oil trading results. And on oil, prices closed slightly lower on Tuesday, adding to a more than 6% drop in the previous session on a report that Israeli Prime Minister Benjamin Netanyahu will hold a meeting for a diplomatic solution to the war in Lebanon. Let's get to the charts then. And to bring us through the technical analysis, Tony Sycamore from IG joins me at the desk. Tony, welcome. Feel like we're doing this interview about 25 minutes too early because we've got this massive inflation read coming at 11:30. What are you expecting?
I'm expecting to see a cooler inflation read today. I'm going to be watching the trim mean very closely, looking for a rise of around 0.7% on the quarter. And for the annual rate of trim mean, I'm looking for it to step down to 3.4% from 3.9% prior. What I think that will do is it does open up the idea that the RBA can cut rates before year end. At the moment, the rates market isn't on that same page. It's pricing in just a 30% chance of a rate cut before year end. But I think it should be higher. I think it should be closer to 50%. I think we're going to see a good number today, and I think that's probably going to start to raise those expectations that the RBA can cut rates again before year end.
All right. Well, we will see. Look, we don't have a crystal ball, so we'll have to wait. No. So you brought some charts with you today as requested. So talk to us through the first on the list, which is the NDX.
All right, the Nasdaq, it's spotlight on tech sector this week. We know that. We've got the mega tech earnings. So far, so good with Google overnight. Tesla last week was pretty good. And the Nasdaq has responded by heading up towards that high we saw back in July, 20,690. Just a very, stone's throw away from that now with more of the big tech earnings to come later this week. And what I like about it, it has been a continued push higher. It's respecting the technicals. It held support at 20,000, which is our short-term support. And I think if it can get through that former high, then it opens the way for a rally up towards 21,500. Now that's obviously pending the tech earnings. It's also pending the US election next week. Where I'd start to get concerned with the Nasdaq potentially doing something which I haven't outlined would be if it was to break through support at 20,000 and then below that 19,600 area. That would probably warn me that we've got a deeper pullback underway.
But if the tech names report well, which they're expected to,
I think so. Yeah, the bar's set high, but geez, they've got a good habit of jumping over the bar, and that, as I said, it poses a positive backdrop for the Nasdaq. And I think we can see fresh highs.
So on to the ASX 200, because we don't have that type of mega cap tech exposure. Clearly, we just seem to be grinding. Is that a right way to say it?
Yeah, I think you're right. It's been a grind really for the last 4 or 5 sessions. It rejected that all-time high to a degree, but not significantly enough to think the ASX 200's topped out. So right here, right now, it's holding above where I have important support at 8,100, and it's holding below that trend channel support, which you can see it's been in place for so long. It's held on every occasion that's been tested. And at this point in time, it sits up around 83.60-ish to 83.70-ish, right near that record high. So we need to see it either break through that record high or break through 8,100 to get a bit of an idea that something else is happening with the ASX 200. At the moment, you can see the price action there isn't particularly exciting, but I think we're going to heat up over the next week or so.
Okay, so next week or so, we talked about inflation. Clearly that will, in the short term, impact the Aussie. But this is very much a US dollar story right now, isn't it?
I mean, look, we're talking about the US dollar at these levels against the Aussie. It was only 4 or 5 weeks ago the Aussie dollar was at a 20-month high, and now we're down 5% for October. It's been a really rapid fall from grace for the Aussie dollar, and it's because a couple of factors, but as you mentioned, the US dollar has been strong across the board. Market pricing in this Trump victory, and I think it's a dangerous position to be in, because if you look at the betting markets, we've got a 40% chance or thereabouts of a red sweep, Republican president, Republican Congress. That means there's a 60% chance of something else actually playing out.
Yeah.
So when you look at the Aussie dollar, if we do get a Democratic victory, the Aussie dollar can springboard very, very quickly back up towards 68 cents. So right here, right now, it has fallen. It's fallen heavily. We've got month end. I suspect we'll see some buying come into the Aussie for month end over the next 24 hours. But look, right here, right now, it is going to be a story about a lot's priced in for the US dollar, particularly against the Aussie, and we now need to see how this election plays out.
Okay, well, we don't have long to wait for that. Don't know if that's a good thing or a bad thing, but we'll leave it there. Gold prices, continue to rise, continue to march higher. At 3,000 is looking increasingly likely, correct?
And that's the top of that trend channel. It's just got a roadmap here. It's following it to absolute perfection. The pullback a couple of weeks ago came towards the bottom of that trend channel around 2,600, and then it's gone on to make new highs. It just keeps extending. I think it can see that 2,800 area at this point of time. Again, it's going to depend a little bit on the US election, but look, there's a lot of uncertainties out there. We've got central banks cutting rates. There was a bit of an easing in the US dollar uptrend last night. Yields did push high, but then came off, and that helped gold push to those new highs overnight. But the backdrop there is very, very supportive, and the technicals remain supportive as well.
Ooh, it looks glittery. Okay, and then we get to Bitcoin. It crossed 73,600 US. Fundamentally, we've got strong institutional support. We also have pretty good economic growth scenario in the United States. Technically, how high could it go?
Well, the risk backdrop, as you mentioned, is very, very good at the moment for risk assets, and this one sits at the pointy end of risk assets. It narrowly failed to get through that March high around 74,000, pushed up but couldn't quite break it. In terms of how high it can get, well, it is pricing in a Donald Trump victory. Again, we spoke about the 60% probability of something else playing out there, but I think even if the Democrats do win, it's probably only a minor setback there. And I expect that once it gets through that all-time high from March of this year, it heads on up towards 80,000. But at this point in time, it's made a nice break. I'd love to have seen this play out after the US election, because I think we're going to see some volatility on the back of that. But by and large, the picture looks very, very good for Bitcoin, and I expect it to break that March high over the next week.
Wonderful. Tony Sycamore from IG, always a pleasure. And yeah, we'll keep our eye out for that 11:30 mark here in Sydney.
Thank you.
Tony Sycamore from IG.